a new clear high to confirm the next leg up. And that's why I think is coming up soon here is silver breaks out. It's going to go up really quickly. We'll get to 40 by the end of 2025. It's only the major central banks in the West that have this mechanism. But now I think their game is almost up because
What if I told you the price of gold is rigged, not by chance, but by design? Today, for the first time on this channel, we have financial markets expert Mario Innecco, here to blow the lid off decades of hidden manipulation by the very institutions we trust. Why are they so desperate to keep you away from physical gold? And what are they hiding from the public? In this video, Mario exposes the secret moves of central banks, governments, and the global elite. Moves designed to control the narrative and keep you locked in the fiat system. The real question is, will you keep falling for it? Get ready, because once you hear this, there's no going back.
Well, it's basically the U.S. Treasury, the Federal Reserve, the Bank of England, and they probably do it through the BIS because the BIS is the banker for the central banks, and they can hide behind the fact that the BIS is a supranational entity, so they're not answerable to anyone. So that's how it works out. But the reason they do it is, and I've learned this through the years, is that they don't want the general public to be involved in buying real physical gold and silver. So, and I could see that there was some kind of manipulation of the price when I first started buying gold in 2002. And I worked in the financial sector, and I was watching the markets every day. I'd never seen a price do the same thing every day at the same time. And I thought, this is strange. But over the years, I learned that, for example, in 1974, thanks to WikiLeaks, there was some correspondence going on between U.S. Treasury and the State Department and the bullion dealers in London. And why was that? Well, because from 1st of January 1975, Americans were going to be allowed to own gold again for the first time since 1933, when FDR made it illegal. And they were concerned, the authorities in the U.S., because they didn't want people leaving the Federal Reserve note or the fiat dollar and going into physical gold, because that was the original reason why Roosevelt made it illegal. So in that WikiLeaks document and correspondence, it states really clearly that the dealers in London thought that starting a futures market on the 31st of December 1974 would be really good, because it would keep gold like a commodity and very speculative, and it would put Americans off from buying physical gold. That the futures market on COMEX would dwarf the physical market. And I think that's what it's all about, because if they were really good at manipulating and suppressing the price, we wouldn't be at 2,700 like we are today. We'd still be at 35. But I think the point of the suppression and manipulation is to put the public off. When you speak to the average person, or even let's say financial advisors, they say that gold is too risky and it is a commodity, and that's what they want, because they don't want you jumping ship from their fiat currency system. And why have they been so successful, in my opinion? Well, because they've been able to keep people borrowing and keep them in the system. And it's a club. It's only the major central banks in the West that have this mechanism. But now I think their game is almost up, because we see China and others, they're buying real gold, and their markets are growing, and they're going to compete with COMEX and the LBMA in London. So that's in a nutshell, really what the manipulation is about. And I think, there are comments from central bankers like Paul Volcker, the late Paul Volcker, said that gold was his enemy. And we saw a bullion dealer from London from the 70s come out a couple of years ago. I think it was Peter Hambro from a really respected banking family. He said it was manipulated, and that the paper markets are way leveraged. They don't really trade real gold and silver. And that's basically what they do it to keep the public from realizing how useful gold is to protect your savings. Yeah, I definitely think so. The break of 2100 earlier this year, that confirmed the next leg up, because up until last year and beginning of this year, we couldn't get back above 2000. I think in February we still tested below 2000, and that was very near the top from 2011 at 1920. So we had to really make a new clear high to confirm the next leg ups. And that's why I think we're still in the early days. We still got a few years left. I'm not sure if it's 3, 4, 5, or 6 in the gold bull market. And the main driver, of course, is inflation. And by inflation, I don't mean the CPI, but I mean the fact that central banks are going to have to cut again and probably do QE again. And it means the simple law of supply and demand. Gold is very hard to get out of the ground. Yes, all the gold that's been mined still above ground, but people are not going to part with their gold when they see what's going on. The other driver, I would say, that is probably going to help the gold bull market is the fact that we could see people from other sectors, people who don't watch gold, look at it and say, "Wow, gold's doing really well." And the Nasdaq, S&P, and Dow, they've done so well. Let's take some profit here and shift our capital towards the precious metals and commodities. So I think that could be a driver, and I think family offices, which are companies that manage money for very wealthy families, they still have a very low kind of percentage holding for gold, silver, or precious metals. That's like 1 or 2% of their assets. So could you imagine people finally realize, wow, gold is doing really well. We need to put a little bit of money into that, and just putting another percent of all their wealth in there could make a huge difference. And the other driver, I think, is coming up soon here, is people are going to realize that the mining companies in the last 3 or 4 months, they've done really well because the price of gold has stayed so high, so their profit margins have gone up a lot. And yes, we've got some results coming up, I think on the 23rd, which is when this video is going to be published, from Newmont, and then in November from Barrick. And that could drive a lot more investors into the mining sector as well, in gold and silver. I think what will happen to the silver price, but problem is I don't know when, we could be close, is that once it breaks key levels on the upside, and I'm talking about here 30, 33 maybe, we could see silver move up really quickly. It's not like it's going to keep going up slowly like it has in the last few years, because maybe people are going to say, oh, we'll get to 40 by the end of 2025. No, I think once silver breaks out, it's going to go up really quickly. I don't know where it's going to go. Probably test the 50 level, and it could be faster than most people expect.
Now that you know the truth, are you ready to break free from the system? Mario Innecco just exposed what few are willing to discuss. If you found this insight valuable, don't forget to hit that like button and subscribe for more eye-opening content. Leave a comment below. What are your thoughts on gold manipulation? And most importantly, will you take control of your financial future? Thanks for watching, and stay tuned. There's much more to uncover.